Welcome back to another stock market open live stream. Today, Jerome Powell speaks twice, which is really annoying because they totally split up the day where you kind of gotta pay attention to him twice. But Powell will speak. Here are the times. I'll be covering them live. So the first one that you can watch is going to be 11 a.m. That is 8 a.m. Pacific time. 11 a.m. Friday today. That's going to be speaking with Spelman College President Helene Gale during a fireside chat focused on the challenges of the post-COVID economy. That'll be followed by a roundtable discussion, also at Spelman College, 3 hours later, with Powell and Fed Governor Lisa Cook, 2 p.m. Friday. So, yeah, both of those will be occurring. I've gone ahead and I've already scheduled the Powell live, so that way if you wanted to hit the little remind button or whatever, you could do that. You could just go to the channel that you're watching this on right now, go to the live section, and then click on the other video and then hit remind if you want. So that's Powell coming up. I think that probably, we've had a lot of Fed speak. Usually what happens is the market is very tentative leading up to Powell. It kind of like reacts to all the other speakers. But when Powell's on deck, they're like, oh, Powell coming. Okay, well, I'm not going to buy any stocks until I hear what Powell has to say. He says, like, the amount of what he says that changes is so little all the time. But it's those little subtle changes that the people actually make a lot of bets on. It's pretty wild. I think one of his biggest subtle changes in his last meeting here was this idea that the Fed was willing to have the economy just grow below potential rather than below trend. And that was a really big deal because people thought, oh, does that mean the economy can grow hotter and you'll be okay with that as long as it's a little less than what it could have been? And that was basically what he was getting at. Which is crazy. And I think that's a way of him saying that a strong economy doesn't create inflation. Like so many people think that a strong economy causes inflation. We're not going to relitigate it now, but that's a very, very common belief right now. So seeing Jerome Powell sort of soften in an angle like that suggests where Jerome Powell's head is. So that's one way of thinking or evaluating where this leader of the free world. Oh, wait, that's supposed to be the president. So anyway, yeah, the leader of the free world, Jerome Powell. It's good to know where his head is. The that's funny. The $55 OMFG shattered Cybertruck decal to make your glass look like it's shattered, like somebody threw a steel ball at it, has officially sold out within just a few hours. $55 little sticker basically in the store. I'll pull it up. The Cybertruck is obviously now announced. That has, of course, led Tesla to drop about 1.5% on the day of the announcement and about 2% on the day of, here in pre-market. Now, here's the photo of that decal. Look at that, $55. I mean, I have to say, it's not a bad looking decal. I couldn't remake it for $55, that's for sure. And it's kind of funny too. It's an inside joke for people who know. If you know, you know. And it's also kind of funny for people who don't know. It's like, oh my gosh, your window's broken. No, it's not. It's like the perfect gaslighting tool. That's what this is. It's just a gaslighting tool, which is kind of like the story of Elon. It's like, hey, this is what we're going to do. And if you don't like it, oh well. Anyway. Okay. So, again, 8 a.m. will be our J Powell for California time. And then again at 11 a.m. So I'll be covering both of those. And obviously adding commentary. Okay, good. So with that, let's now take a look at some of the data. One thing that I would be somewhat concerned about, I don't know if we should call it concern, but let's just say something I'm paying attention to. There's this thing called the Goldman Sachs Financial Conditions Index. And there are many of these financial conditions indices, but the Goldman one seems to be one that gets paid attention to frequently on Wall Street. And when financial conditions get tight, you start hearing Powell get a little dovish, mostly because he's, trying to expand the ability of the Federal Reserve's work to have an impact. Well, when financial conditions loosen, which is when this line goes down, sometimes you get the Fed that comes out starting to hawk. And as you can see, November 1st, the last Fed meeting was right there. Look at that. That's crazy. So the last Fed meeting, financial conditions were here. Financial conditions have essentially collapsed relative to the year high since Jerome Powell's meeting, which does present the slight risk that maybe Jerome Powell will be a little bit of a hawk today. If I had to guess what direction he was leaning, it would be slightly in the more hawkish direction, solely to potentially prop up these financial conditions and tighten things again. Unless, and this would be very interesting, if Jerome Powell suggests dovishness after this kind of collapse in financial conditions, then we ought to be much more convinced that the Federal Reserve believes inflation is turning, dare I say, transitory. Now, my favorite, kind of charts to look at for this are the Nick T kind of 3, 6, and 12-month annualized charts, mostly because these are exactly what the Federal Reserve uses in their discussions, in their opening remarks when they do speeches at the Fed usually. Like when they do the FOMC presser, Jerome Powell's always bringing up the 3, 6, and 12-month annual, the 12-month, and then the 3 and 6 annualized. And that's what this chart is. And this chart shows you that we've had more disinflation over the last 3 and 6 months than we've had over the last year. So in other words, we're trending in the right direction. In fact, we're almost at target on both the 3 and 6 month trends of inflation. Now look at them. They're sitting right here at like 2.5%. There's 2% right there. And we briefly touched below 2% there for a hot minute. 2 data ago. So those will be, I think, not only what we pay attention to with JPOW, but also what becomes very important from the angle of the market today. Again, it's a crapshoot in terms of which direction it is, but let's put it this way. If Jerome Powell is dovish with this collapse in financial conditions, either inflation's basically almost gone, or things are about to get bad in the economy. Okay, that's like if he goes dovish, or if he is dovish today. If he's hawkish, then he probably doesn't know and he's just hedging. That's my guess. All right. So with that, here's our pre-market. You can see basically November's rally. Oh, I still feel bad. The cramps, they come in waves. It sucks. And they're worse in the morning too. So yeah. Thanks, Trader Juice. Anyway. So here's November. This pretty much green explosion here after the Fed meeting. It looks like we had our first red candlestick the last day of the month, basically, and going into today. So we'll see. Disney fell a little bit, but it's also up a quarter yesterday, quarter today. Look at Ulta. Ulta is going to open at 425. That line actually already represents. No, sorry, 473. Oh my gosh, it's going to gap up to about right here. It's going to gap up to higher than where it was in August on another beat. So this is one that I've been watching for a while. I guess I should have bought it here at the 200-day SMA, but I didn't. So anyway, now it's going to gap up to here. So, well, actually a little lower than that. There we go. So good job, Ulta. All right. Then there's GameStop, which had a little entertaining little green candle there for a hot minute the other day. Not much of that right now, given that it was down 10% yesterday and kind of flat in the pre-market. Apple, pretty much flat. Let's go take a look at some of the larger losers and gainers. Coinbase up another 2% right now, 127. Ulta, 11%. Looking at Tesla down 2%. Right, Tesla doing as great as Dish Network right now. You've got Intel down 1%, Etsy 0.86, Affirm's down a little bit, bobbing around here at about $34. $34. It's like $10 higher than it was a week or two ago. Nvidia down 42, and Enphase down about 1/3%. So now it is time to see what the friends have to say at the CNBC. Oh, okay. I guess I got to get some tape for that. All right, well, we won't do that right now. We'll look at what the suits have to say instead. So, short sellers see $80 billion hit in November. RIP. Wow. $80 billion of shorts. That's nuts. If you haven't seen it, yesterday was the DeSantis-Newsom debate. I covered that live. That was exhausting. Let's put it that way. You can see my reactions in it. All right, then we've got Bill Gross's recession bet. He has made big bets on accumulating bond positions. So he's been a little bit of a recent winner here of a bond rally. He bought 3,000 3-month March 2025 contracts tied to SOFR. Based on Friday's profit wager, which is still active, he likely netted more than $4 million in profit so far. Nice. Making the bets on those rates coming down. Although Bill Gross's argument isn't solely good. It's not just that rates will come down. It's also a recessionary bet. So not fantastic. Then we've got this idea of channel risk. About history rhyming when it comes to geopolitics, and this is not just Russia, but Israel and otherwise, and how it might affect investments. And the economic impact of war deaths is close to its highest since World War II is being suggested right now. I can show this chart. I'd be very curious to see how exactly they calculate this. The economic impact of war deaths. That's what this chart is. And they show that the economic impact today is basically worse than what we've had in prior conflicts here. As you can see, Iraq, Iran in the 80s, early 90s. You've got Vietnam War. You've got the ISIS insurgency during the Obama admin there. Let me see what they are suggesting on this. So the cost of conflict to the global economy this year is likely to be the highest since World War II. Notice this chart doesn't actually include World War II. That's okay. Here, I'll remove myself for a moment. Wars in Ukraine, the Middle East, and Africa have killed more than 100,000 people and disrupted the lives of many more. Post-Cold War peace dividend appears to be fading. The most important cost of war is the innate value of human lives, lost and damaged. A tragedy, whether those are lives lived in countries rich or poor. And so basically what they're trying to do with this chart is multiply battle-related deaths by per capita GDP and then they're able to determine a GDP impact. So, for example, the death of a Chinese human is worth about $12,000 to GDP. The death of an American is worth about $65,000 to GDP. Let's look at the Israel per capita GDP. That's worth about $52,000 per GDP. The Palestinian per capita GDP is worth about $3,600 per life. It's so callous to think about it this way. A Ukrainian life worth $4,800 on a per capita basis. A Russian life actually worth more. They're almost 3 times as much. $12,000. Wow. So that's basically what this chart is doing. And then they're taking the deaths, apportioned to their countries, and then multiplying them, and then suggesting that, oh no, there have been so many deaths that now we are really potentially starting to affect the economies of individual countries. Now, they incorporate a few different things: the intensity and duration of conflicts. Obviously there's some challenges of how precise to be here, but they try to adjust for that. And they talk a little bit about where they collect their data. But the hope is, here's a hope. The hope is that the current surge in conflict is driven by one-off factors that are not the start of a trend. Because quite frankly, they're suggesting if this is the start of a trend, then we're probably looking at more of a global recessionary impact, which is not great because we don't want recession. Recession means more pain. Hold on a sec. There we go. The stupid little IR stickers have fallen off. I need to tape them back on. That's infrared, in case you're wondering. The little stickers that you use so you can basically point your remote in any direction or just a random direction. It goes to your... Anyway, it fell off. And they keep falling off, and I'm too lazy to get tape, so I got to handle that today. I thought I'd be able to salvage it. I wasn't. So that's an interesting chart. It's very, unhuman. It feels wrong to talk about, all lives should be equal, but in the sake of that chart, they're not. They're just literally putting a value per head and then multiplying it. It's kind of gross. Some people would say disgusting, but that's economics. I remember the economic debates of, why don't they put seatbelts on all buses? I'm well, statistically, so few student deaths occur on buses that it's not worth the cost because you're spending maybe $1 million per life saved. Whereas, there are other things you could do, like maybe better lit crosswalks that might cost $100,000 per life saved. And so then they prioritize the crosswalk projects. That's one thesis. The other thesis is the politician of the district wants to brag about new crosswalks because the voting electorate gets to see them and use them, whereas students don't vote. So bad. Yeah. All right, let's listen in over here.
What I'm seeing here is that Meta, across their various platforms, they're committed to rooting this stuff out. They have dedicated teams. Now, they've had a bit of a kind of a drawback in what their resources and headcount is, but they're still committed to it. And they're making these,
this is an interesting idea that, the people who are dying in combat are potentially even more valuable towards GDP because, these are not your retired people. These are not children. These are not, homemakers. These are the people who might actually be driving a household's income. War-aged men, basically, and to some extent women. So could that have a disproportionate effect? Yeah, absolutely. But the expectation is that that would be true in all of these battles. So usually when you look at data as an economist or somebody just studying the data, and this is my opinion, but my opinion is that you don't really need the data to be 100% accurate. You need the data, like this does not have to represent the actual economic impact right here, right? It just needs to represent the relative economic impact. So do we have more of an impact today or then? Or then? So that's the way to look at it. Oh, I forgot to turn that on. Okay, there we go. There you go. Dot Robin. Florina says it's not the value of a life, it's the GDP per capita for each country. It's not factoring in purchasing power parity. Well, we don't know that they're not factoring that in. That's a good question. I mean, basically, you're saying, hey, well, you can't just compare per cap that way because somebody can live a good life on $20,000 a year in one country, whereas in America you need like $70,000 a year to live that similar life, right? That's what you're arguing, which is fine. I just don't know that that matters from a GDP point of view, because from a GDP point of view, we take GDP per capita and then we get changes in percentages. Okay, are you in recession or not? When your numbers go negative, you're in recession in your country. And then that sort of weighs into the global economy as to whether it's glowing. Like the global GDP, as far as I'm aware of, doesn't really care about purchasing power parity, which is just a fancy way, PPP, fancy way to just say, like, how much does bread cost in your town versus mine?
Right now, in part due to some of the court cases that are ongoing right now and that'll soon go in front of the Supreme Court. So to a certain extent, Facebook and Meta, Facebook, Instagram.
Somebody here says that's why the ambulance is quicker in rich areas than in poverty areas. Well, I don't know about that. That might be a little bit of a chicken or egg problem. Where is the ambulance quicker because the politicians want to prefer the rich neighborhoods, or do the rich neighborhoods have less, aimless crime, therefore less injuries, therefore less busyness, therefore more availability to be faster? Same would be, I mean, that's really a thesis of the concentration of poverty, which we've talked a lot about on the channel, which is this idea that as an area becomes poor, its services decline in quality because more people actually move there because it's cheaper for them to live there. And as more people live there because it's cheaper, the quality of services goes down. Oh, I feel sick. Okay, hold on. Let's actually listen here.
We don't have in the U.S. a federal privacy law.
Yeah, right. And then because of people having more money there, the taxes are higher. Exactly.
For years now. And so companies, tech companies in particular, are baselining against European laws because they don't want to have to bifurcate a governance structure between the U.S. and the EU. So a lot of those, the implementations are rolling over here domestically.
Chris, I want to thank you.
Thanks so much.
Fascinating.
Yeah.
I don't know how worried we should be. How worried?
In advance of the 24 election?
Yeah.
Look, so
compared to what people were talking about in 2020 and 2016.
The motivations of the actors across.
What's the worst that's going to happen? It's going to be Trump or Biden. Yeah, you should worry.
Well, no comment.
Does it matter who skews it one way or another?
I think the motivations of our adversaries are completely different than they were in 2020.
What would our adversaries want? They take your pick. They're both bad for us.
I think Russia and China in 2020 generally hung back. They said, "You guys do this
Who would they want in
yourselves."
2024?
Can I ask this one related question?
Sure.
The one related question is, if we find demonstrable evidence that China, there's one thing to find Russia doing something or not doing something, but if China is doing something, does it change what we do to retaliate? And do we?
So does it? Okay. So you mentioned in the lead up that we were going to talk about the water system attack in Pennsylvania.
Yeah.
So Sentinel Labs researchers have tied this to cyber avengers. I mean, they came out and claimed it. This is an Iranian Revolutionary Guard linked group of hackers. So it may be that the Iranian government
has done this
to a water system in the United States, critical infrastructure, a brewery in Pennsylvania. I mean, that's critical infrastructure.
Is it Yingling?
No, unfortunately it's not Yingling. But look, that's an attack right there. What do we do? What do we do to Iran? What would we do if China hits us with an attack in advance of the 24 election? These are the questions I think the White House is struggling with. That administrations in the past, what did we do to Russia after the NotPetya attack in 2017?
That's a lot scarier.
It's sanctions, right? Do we take it up a notch?
Thank you, sir.
Thank you.
All right, news just out on the U.S. electric vehicle sector. Phil LeBeau has that news, and he joins us right now. Hey, Phil, what's up?
Hey, Becky, these are new rules being proposed by the Biden administration, essentially what they've outlined in the past in terms of making production come here to the United States. These are the rules in terms of what levels of components and sourced materials will have to come here. We're not going to go through all of them. These are transition levels through now and 2026. North American components for 2024, 60% of what goes into the EV batteries will have to come from the US, Canada, Mexico, basically that area. Critical materials and minerals that go into the batteries, either from the US or our free trade partners, basically they're saying not China, 50% of what goes into the batteries will have to come from those countries in 2024. As you take a look at EV sales and how they are expected to grow through 2030, remember that they're going to be topping about 1.3 million in 2024 here, and then it continues jumping up from there. GM and Ford, as you take a look at those shares, remember they have deferred a lot of their EV investments, but they're still building a number of gigafactories of their own for battery production. And when you're talking about gigafactories, obviously the biggest is in Texas, owned by Tesla, but they also have battery production out in California. Rivian is, for the most part, going to be working with suppliers here. It will be working with suppliers here as it does right now in North America. So this is, guys, these are the rules that the automakers will need to hit in order for you and I to get the $7,500 federal tax credit. And remember, we can apply that at dealerships or directly from the automaker if we're buying directly starting January 1st. It's no longer where you have to put it on your tax form at the end of the year.
Phil, thank you. See you later. When we come back, we will talk markets and get you ready.
So that's interesting. You know, I'm noticing the EV stocks not really moving on that. The reason they're not really moving on that is because we kind of already heard this was coming down the pike. So my expectation is this is, at this point, kind of a no news update. Kind of like, thanks for officially bringing it out. We already knew you guys were coming out with that. So, yeah, that probably explains that. But we can never be certain. Barron's Advisor has a piece this morning about Jerome Powell set to participate in back-to-back discussions where, quote, investors will be eagerly watching for signals that the U.S. Central Bank is ready to call an end to interest rate increases. You know, imagine if Powell comes out and says, yeah, we're officially done. I don't know. If he does that, it's a sign he's worried. Yeah, I mean, we kind of already broke down the scenarios here, in the last 10 minutes, or maybe 15 minutes here. But that'll be very interesting. I wouldn't get too excited though. I'll say for the past 2 years, it's been just disappointment, mostly with the Fed, which is fair. You know, remember those December minutes, like the worst Fed meeting ever? Yeah, that was 2 years ago this month. Welcome to December, by the way, in case you didn't remember. Soon we're going to have to start writing 24 on our, papers and texts and documents. Great. I feel like I'm barely used to writing 23. Oh, this year flew by. It's painful. Now I have an 8-year-old, a nearly 6-year-old, and 2 little 1-month-olds. They're cute. They're so great. But I wanted to play with them so badly yesterday, but I'm like, well, I'm sick with salmonella. And even though that's not theoretically contagious through the air like COVID, it transmits through saliva. It's not that I'm globbering up my children. It's kind of weird, but it's kind of like, all right, maybe I won't even kiss them. We'll just wait a little bit. You're too fragile. But another thing that was actually weird is my Tesla Model X, which I bought 5 years ago this month, had a 1.49% interest rate. And it's so weird, but just last night, I made my final payment on that car. And the reason I never paid it off is because it's a 1.49% interest rate. I'm like, even when rates were like 2% for real estate, 2.5%, I'm like, why would I pay off 1.49%? It's free freaking money. So, that was weird. Because 5 years ago, just to sort of reflect back, I had one child who was 2 years old and like, I don't know, 80,000. Is that, yeah, no, wait, 5 years when I got my Tesla. No, when I got my Tesla, I had 0 subscribers. Maybe I had about 1,000. Yeah. A whole Tesla car payment, the length of the existence of this channel, basically. That's freaking creepy. I don't know, man. That's just creepy. That flew by. Now I want to go to the bathroom, but I want to, but I don't.
For the better part of the last decade or so, when we had a zero interest rate environment. And if we looked at what's happening next year, we have over $5.5 trillion of global corporate bonds that will need to be refinanced next year. So I think as time goes on, we are going to start to see more of an impact from the interest rate environment that we just haven't seen yet.
All right, we've heard this like a million times before. All right, let's see what people are saying here. Somebody says, send an email. Well, when and where did you send it? The whole office is back today in the office, with the exception of Mike Hughes coming back from the gig at Texas. So we'll do the podcast Monday. But if you're waiting for an email reply, it's probably because yesterday was really busy. So if you had to buy a new vehicle, would you try to get a new Tesla now with 6-month free charging or wait until the first of the year? Ooh. Well, see, if the $7,500 tax credit is really the question. For your 2023 tax return, it depends if you're going to be on extension or not. Because if you're not on extension, the $7,500 tax credit would come to you in about April or May. So you'd certainly get it a lot sooner if you got it in January. But, then there's that FOMO potential. I wonder what the useds are going for. Although so far it seems like they've been holding up their value pretty well. Like, if I was going to buy a Tesla, it'd be the Y. Yeah, I'm not going to spend $100K on the Cybertruck, and then you're still going to have to wait like a year for it. But I wonder if we can get the Tesla used inventory. Just a used inventory. Remember when they didn't have used inventory? And then all of a sudden they got used inventory, and now they have a lot of inventory. Yeah. So anyway, I'd probably go Model Y and which one's the cheap one? There's the performance, then there's the long range. Which one? Hold on, let me see. Let's go look at it really quick. Tesla. No, not the X. I do like the X a lot. Okay. So if we were to go buy this, you've got the Model Y regular. Okay, and then the long range. 260. I'd probably go for the long range. I think that's good bang for your buck. So what are these suckers selling for? You've got 40,000 miles. Oh, these are like used. Oh, these aren't new used. These are like sometimes you get in here and they're 5,000 miles or whatever. But these all have some age on them, 50,000 miles, 23,000 miles. I mean, that's almost the cost of a new one. Maybe it includes FSD. It just says autopilot. What's up, Jack? Oh, that's really interesting. Yeah, well, I mean, you don't get that much of a discount for a used one anymore. That's crazy. What up, boy? Checking out Teslas. You look what they announced yesterday that you can start ordering.
Oh.
What do you think about that? Which one would you buy?
Which one goes in the snow?
Which one goes in the snow? Why, you want to go skiing?
No, because I saw like a little clip of one going in the snow.
Oh, I think they drive them all in the snow on the homepage. That's what you're talking about. Like, here it is in the mud. There it is. Yay. Kind of like that.
Yeah.
Oh. I mean, technically they all can. You just need the right tires. It's all about the tires. Oh, and you missed Celebration by a minute. You were so close.
No, I texted you. Didn't
Oh, it was my fault. Oh, sorry. All right. Let's listen in over here.
From any of the Mag 7, but you can find stocks like Affirm, Datadog. These.
Is Jim Cramer pitching Affirm?
So are you? I'm curious though. Is it your belief that the upside for the Magnificent Seven, which of course powered the S&P, powered the S&P over the course of the last 11 months,
right,
is sort of going to lag a bit?
Right now, yeah. And I think that there's going to be a broadening out, which I like, David. I like a broadening out, but it's going to be in these stocks that, frankly, are lower quality. All right, and I don't want to slam Ulta, because they had a great quarter. But, when you can pick up 10%, just like that, that's what people want. They don't want incremental, because their speculative juices are here.
Mm-hmm.
Individuals coming back. They like what they see. They like what they use. It's back to that right now.
Right now, you think it is back to that.
Williams-Sonoma rings the bell. Okay?
Yes, here at the New York Stock Exchange.
That's what people want, David. They go to the mall. The stores are crowded.
Yeah, I don't know about the stores being crowded at the mall. I'm not sure about that, but they like what they see. I mean, the fact that Roku has surged this month, or last month, I guess now, I'm blown away. Like, I think it's a bad company. I think it has bad fundamentals. I kind of almost despise it. But I can't argue this. Again, though, there's a difference between short-term fundamentals and long-term fundamentals, but I don't really care if over the last year it goes from $38 to $108. That's pretty awesome. Well, I guess 103 now. But I don't know, man. Like, Roku. Oh, I mean, I'll pull up their latest investor relations piece. Let's look at their cash flow.
Smart money never caught up to what's happening. David, a lot of people truly went with the hand that they've been given. And I'm not going to pick on Mike Wilson, where there are other people who have been negative. But when you can catch a Victoria's Secret, which had a very good Thanksgiving, PVH, 3 great days. Actually, PVH had a very good period. Very good.
Although you weren't happy with the earnings.
Well, because all right, so this is a good example.
I remember, this is not...
No, the conference call occurred the next day.
Right.
The numbers that came out the night before, it was a guide down, forecast cut.
Mm-hmm.
David, a forecast cut before the bonds turned to be your friend. Boom. Now, Tommy Hilfiger, have you seen? Good luck. Calvin Klein, not in TJ Maxx this year. It's in Macy's. It's
Really?
Macy's. Yes.
I was going to stop
Get with
by
the beat.
TJ Maxx.
Get with the beat.
Calvin Klein's always been at Macy's.
With a car a truck that's bulletproof.
We're going to move on to that in a second, but I want to sort of kind of get a roadmap from you a little bit more in terms of the month ahead, to the extent you think so. So Russell 1000, you do think there's going to be a broadening. You do think there are opportunities in certain stocks to pick up significant percentage gains.
Yes.
Although we're not going to have a lot of catalysts, Jim. Earnings season's over.
No, but, David, I think the theme that we're going to see, and this people better get used to, is that the consumer is very strong. Very strong. We're having a backlash. The stocks that are going up are consumer-led, and also, and I think this is real, companies that were driven down by the GLP-1.
Wow, wait a sec. I remember we studied this. We made a video on this After housing stocks peak, the next sector that usually does well is the consumer. That's very interesting. The consumer stocks, at least. It's not necessarily saying the consumer is going to do better themselves, but consumer stocks start doing better. How interesting. That's exactly what ended up happening. So let's take a look briefly here at Roku's 10Q, for example. This is it. Let me get to their financials. Yeah, come on, man. Their net loss like more than 2x. Net cash, though, they do have cash flow. Wonder where they're getting it from. They took an impairment on assets and then a lot of stock-based comp. That's all. I mean, the impairment could be one time. So that's what they're arguing. So net rev. So we've got revenue that's actually up, but I want to see what the costs look like because they were getting into like TV manufacturing there for a minute. Okay, cost of platform 408 divided by 786, 51.9% costs, 51.9 on platform. And then devices. Oh, yeah, no surprise. They're losing money on the devices. But they knew they would. I mean, they're losing, what is that, 7%? So, that, well, this is about 107% cost. So they're losing money on the TVs. Again, no surprise. We figured that would happen because that was a stupid thing to get into, in my opinion. But what they're trying to suggest is, oh, well, by being in it, we can install Roku. And so that'll help us grow. So now they've grown 19.8% over the last year. Their sales and marketing, don't mind this, their sales and marketing grew 50%. Their R&D almost grew 50%. I'm just going to put like 40% here. It's probably more like 45%. I mean, I'm just totally quick mental math guessing. I could fact check it, I guess. 282, 207. Oh, 36. See, this is why you got to fact check yourself. My first number was closer. 36% growth. Wait, did I do that right? No, I didn't. 207. Yeah, that doesn't make sense. No, wait. 282 divided by 207. Oh, yeah, I did do it right. Okay, all right. So what else? Net loss, $330 million. Wow. I mean, their gross profit is half of what you need to be able to cover the OpEx they have. I don't like anything about this company, but started great. $2 billion in cash available. That's nice. Like the sound of that. Another 720 mils in receivable through the end of the year. That's nice from September. Okay, so if you have that by December, receivables. Oh, sorry. No. That's not coming through the end of the year. That's coming through within the next year of September 30th. Got it. Okay, so whatever. You have bills to pay of about, 1.1 million or billion. 1.1 billions. Long-term debts, only 52. I mean, they've got the runway. That's sort of the Cathie Woodian argument. Is, oh, well, if they have the cash runway, who cares if they're losing money for a while? They've got the cash. All right.
Because I come in peace. You ready?
Yeah.
All right. I've talked to a major industry executive in another auto company. Okay.
Right.
Since the glass cannot stop a bullet and humans' vital organs sit above the door line, it's really not compelling at all from a safety point of view to say it's bulletproof.
It's not bulletproof.
No, but it's kind of like Spaceballs.
Okay, if you say so.
Yeah.
I mean, what's it going to mean for
okay,
Tesla?
so all right, here it was stainless.
That's a lot of bullets.
Apparently, it was stainless steel.
Look at that.
Why? Some people say to avoid the investment in a paint shop, which costs $100 million. Metal surfaces to save them. Come on, David, this is priceless.
What is that?
Why do you mock me with your silence? This is some of the best stuff ever.
You're happy with what you got there.
Yeah.
All right.
You didn't see that.
As for what it means for Tesla, shares of which have been moving down of late during the course of the last week. Of course, Elon was Andrew Sorkin's guest a couple of days ago. Really not a lot of conversation about Tesla during their conversation.
Right.
We've covered, obviously, a lot of the things that he had to say. But I did notice Tesla shares did move down yesterday. Sometimes it does seem to move almost in sympathy with people's view of X, which obviously is a private company. It's virtually nothing to do with Tesla other than it's owned by Elon Musk.
Well, okay, Tony Sacconaghi, you know I respect his work.
Yes.
Super nice. He's got a sell on Tesla.
Yes, he joined us yesterday on Squawk in the Street.
Then never mind. Did you hear his numbers of how many they're going to sell?
I know that he was not looking for
250.
That's not with any zeros behind it.
No, 250. And Morgan Stanley, of course, Jonas comes up with a good one.
Give me the Jonas report.
He says that they will sell 50 in fiscal year 2050.
50 this year?
Yeah.
All right, but it's not about this year. Come on.
That's not a lot.
They see, ultimately, they could see sales as much, some think 250,000 a year.
It's Lamborghini. It's for the fanboys. It's everything that we hear about.
Meanwhile, the Model Y is going to be the biggest selling car in the world.
Oh, no. I like. The
not EVs in the world.
And there's a refresh cycle. It's going to be terrific. I'm just saying that this will sell because there are enough people who love him. Yeah. And it does tow. Mine doesn't tow as much as this.
No. I haven't gotten my Cybertruck yet. Do you have the picture though? But I saw
my Maverick cannot tow like this. My Maverick cannot tow like this.
No. There it is.
And my Maverick is
was early days, by the way. That was back in May.
My Maverick's not bulletproof at all.
Shareholder me.
Let you in the car. Now, of course, you can actually buy one.
Okay.
That was a great day.
Well,
all right, Jim. You ready to move on here? Take a break because I'm going to try and get my system
Dan on.
set up
What time
here.
is Dan on? Dan thinks it's.
Yeah, it is interesting. This idea that maybe Tesla will only deliver like 50 in the year. That doesn't surprise me. There have been a lot of people expecting that Tesla will deliver hundreds of these. I don't think scale works that quickly. I think they've really done whatever they could to rush as quickly as possible to get this truck ready for the delivery event. It's actually impressive that they were able to deliver what they did. So good for them. But now you have to get into the longer term production cycle, and these are gonna roll off the lot pretty slowly to get started. If we get to 5,000 of these a month by the end of next year, that'll just show you that Tesla's not a company to bet against. That'd be really cool. Yeah, manufacturing's a B. Yeah, exactly. Hey, Jack, can you come here for a sec? Does anybody remember the reference I made about Jack yesterday? I talked about it briefly. When we were building the Lego Technic car, when we were building the Lego Technic cars like 2 nights ago.
Which one?
That one right there, the one we're working on right now, the one you're trying to beat me on, and you're racing, and that's why you're waking up early to go build it right now.
Yeah.
While I can't build because I'm live.
Yeah.
Yeah. Okay. What did you say when I said, "Hey, you want to get into building cars in real life"?
I don't remember.
You don't remember?
Yeah.
So what I remember is, and tell me if I'm right, if that reminds you, what I remember is you said, I was having a problem with the Technic.
Yeah.
And you're like, no, I don't want to build cars. And I'm like, why? I'm like, because of this, you're having problems. It's hard. Do you remember that? A little bit?
I was like, I also said to Mom, I don't know if I said it to you, if I can build 18 plus Lego sets, but I can't even build 9 plus.
Yeah, the car, and that's a car. So you're basically saying you could build a plane like the Concorde, which is an 18 plus Lego set, but you can't, you have trouble with the 9 plus because it's a car. Cars must be hard to build. Yeah, good point. It's a really good point. Yeah, should have shorted the stock at that point. Jack stock picks for the win. Tesla now down 3%. Very expected post Cybertruck event here. So not the greatest surprise. Anyway, now we've got this. This is interesting. Cox Automotive revealed that the average price. Anybody looking for an inventor? Oh, that's interesting. The average price of a full-sized pickup in October was $66,000. And so then people are like, why are people upset that the Cybertruck is priced at $72,500 after the Inflation Reduction Act? The fuel savings alone will close that gap. Yeah, it's a good point. That's a good one. Yeah, and I did not like the throw the baseball. I mean, I called that out when it happened. Yeah, that was a little annoying. But I really don't know if they're missing a PR department. I mean, I probably am too, but I feel like they certainly are. Elon's the PR department. Oh yeah, let's throw something at the window again. Oh, should we use a steel ball again? Nah, man. Just use a baseball. And then softly throw it. All right.
The side effects sounded not good at all.
Yes, but
and a lot of people, greater than 50%, stopped taking the drug.
Total loser. And Pfizer's had such a string of tough, let's say, shortfall of new drugs, including Nurtec, which they bought for a great deal from Biohaven.
Yep.
And have missed the projections right out of the chute. This is a great migraine drug.
Yep.
David.
This is boring. Maybe because I don't pay that much attention to the pharma. I did, though, just see Pfizer canceled their weight loss drug over too many adverse side effects. They had a twice-a-day one to try to compete with some of these other weight loss drugs. And, yeah. Oopsies. So, this is an interesting chart here. I'm going to pull this up because there's a commenter here that says, Ivluva. Is that Russian? Ivluva. You all aware when you charge your electric vehicles, it has the same carbon footprint. You have to get rid of toxic batteries after their useful life as well. So obviously, here's somebody who does not like electric vehicles. So let's try to understand the context of this piece here from Reuters. When are EVs cleaner than gas cars? It takes a typical electric vehicle about 1 year in operation to achieve carbon parity. So in other words, at manufacturing, the electric vehicle is actually dirtier than a Toyota Camry. Corolla. So here's a Toyota Corolla, the orange line. And the dotted purple line is a Tesla Model 3. So the Tesla Model 3 is dirtier than the Corolla. But after a year, almost all of these cars, well, what's the blue one? Oh, hold on. Oh, interesting. Oh, it includes what you charge it off of. Oh, wow. Look at that. Hold on, let's see here. Although production of EVs and batteries generates more CO2 before the first wheel turns, total carbon footprints of gas cars quickly overtakes that of EVs after 15,000 miles of driving. If the EV draws electricity from a coal-fired grid, however, the catch-up period stretches out to more than 5 years. If the grid is powered by hydroelectric, the catch-up period is only 6 months. And if you use a mix, it's lower. So this incorporates everything that you're saying. So here, Mikey Sant69, who says, Olulva, basically your EV sucks and it's going to use as much, be just as bad as, for the environment as gas cars. Well, I think if we trust this chart, which maybe you don't, I got from Reuters, maybe you don't. But to the extent that we can trust this chart, you're wrong in every scenario. Now, you're correct for the first tiny little bit that the car is manufactured. But over the life of the vehicle, which is what you said in your statement, you get to the useful life of the batteries. Well, you're wrong in every case here. EVs are much cleaner than carbon-based ICE vehicles, internal combustion engine vehicles. So I don't know. Sometimes people get mad at me. They're like, that's rigged. Is it? Or are we just using logic to try to understand what's really the truth versus what, people perceive?
No to you for a drug?
They're fantastic. The drug I've invented, the oxytocin with thickener drug for tinnitus, no problemo.
Wow.
It's got a patent. Look for it. Look for it on your shelves within the next 2 decades.
Okay. All right, coming up, Jim's going to get ready for his mad dash. We'll count you down to an opening bell that's less than 9 minutes from now. Let's give you one more look at futures. You've seen we are going to have a lower open, it would appear, though. Who knows?
Oh, yeah. Lower open. Bad day. What do we got right here? Nick T tweets. Oh, a new Wall Street Journal piece from Nick T. Oh, Nick. Oh, Nick, what do you have for us today? What do you have for us today? Mikey Sant wants to slippery slope here. Yeah, well, you may have won that argument, but what if there's lithium in it? Oh my gosh. You know what, Mikey? It's your turn to do some research. That's why it's so hard to have arguments. Then we'll do some research. But so far, you're losing. Fed's interest rate hikes are probably over, but officials are reluctant to say so. Oh, I feel bad again. I think I drank too much of the sparkling water. Federal Reserve officials are increasingly confident that they don't need to keep raising rates to defeat inflation, but they aren't satisfied enough to declare an end to hikes, let alone start a discussion about lowering. That's not a big deal because they can start a discussion about lowering instantly, and they can come in on a Sunday, So, well, Mikey, if you did your research, where is it? Show me, give me a link, put it in the chat, put a link in the chat. All right, Federal Reserve officials are increasingly confident. Okay, this leaves them on track to hold rates steady at their December meeting while maintaining public guidance that their next rate change is more likely to be an increase than a cut. This, holding steady while maintaining guidance that they're more likely to increase than cut. Right. Exactly. Okay. This is an interesting argument from Matthew. ICE fumes get spread all over the planet, whereas EV carbon is consolidated into where the battery is made and recycled, and it can be filtered. That's a really interesting argument. That's true. Recycling is expensive. Would I sell Tesla to tax loss harvest? I wouldn't. Gaylord says EV is a scam. Oh, man. The market for second life EV batteries far surpasses demand. It's great. Far surpasses demand. Did you get that one backwards, Peter? Do you mean the demand for batteries far exceeds? I don't know. Maybe I don't know. I'm not sure about that. I don't know the answer or what the fact is on that. Anyway, Fed most recently raised its benchmark federal funds rate in July to a range of 2.25% to 5.5%, holding it steady at the Fed's third consecutive policy meeting would leave it unchanged through January. Yeah, that's true. Okay. Monetary policy will need to stay tight for quite some time. So how's that playing out? Ooh, look, Williams said this. Williams told reporters after a speech, we said we have to stay tight for quite some time, but now we have to assess how is that playing out. Several months of subdued inflation readings have led investors to speculate the Fed will cut rates by May or even earlier, but officials aren't ready to entertain such deliberations. If inflation is going to flare up again, I think you would want to have the option of doing more rates. Well, sure, but where are you seeing this? This potential for inflation. I think they're just suggesting that. Well, if it does, we don't see it now, but if it does, that's funny. All right. Morgan Stanley sees less than 5% of Tesla revenue from Cybertruck by 2025. This is Morgan Stanley forecasts 50 deliveries this year, 30,000 units in 24, and 78,000 units in 25. Oh, wow. That's, what did I say? Yeah, I was a little bit more ambitious than Morgan Stanley there. I have 60K units for 24, which is about twice Morgan Stanley. I also have about twice for, a little more than twice for 25. But I agree with this 5% part. Oh, but that's for 25. Okay, I'm more at 5% for 2024. But I also agree. It's going to be a while before it actually moves. Morgan Stanley maintains an overweight rating of $380 per share for Tesla. All right. Market moved a lot in November, but a lot of my holdings didn't move much. How do you stay positive when you're left out of the rally? So you kind of have to remember the market goes in these weird like cycles. It's kind of like you're a child in preschool and you're what? I know you're not, but you may as well be. Oh. So it's kind of like being a kid in preschool where you have like 30 kids and then you have, I don't know, 10 groups of 3. Okay. So you got 10 little groups of 3 and then the teacher comes in with popsicle sticks and, you know, it's taken her a while to get the popsicle sticks out. And it's like, it's not your turn. That group's getting the popsicle sticks. So you have to wait. And, oh, yay, now you're up. Yay, I'm getting my popsicle stick. And you get to start eating and enjoying it. The person at the end of that cycle is going to get to enjoy it a lot later than you. But then they're going to enjoy it longer than you. So the point of that is to say everybody's going to get their popsicle stick at some point. It just goes in cycles. And you can't always be on the up. You can't always be getting the ice cream. Yeah.
Delivering strong performance for the quarter, and then it talks about how right now, Christmas season really strong, and then the stock goes up 50 points. 50 points on the mention of how strong things are right
now.
Foot Locker jumped 16%. Victoria's Secret jumped about 10%. PVH was down 6, then it finished up, and then it moved up 6. David, I am telling you that this is proving to be a very strong brick and mortar holiday season that people aren't talking about. Everyone's so busy talking about econ.
Well, also we get so many different data points. It almost is hard to make sense of them all. You get the Adobe data, and you get this, and the MasterCard data. You know.
But David, everybody that
but what we're hearing, to your point, on these conference calls, which obviously are discussing the previous quarter, when asked to weigh in on what they're seeing right now, these CEOs are saying demand is strong.
November was unbelievable. Victoria's Secret now best in years. Now, David, here's something that's really interesting. Both the mass and the prestige cosmetics are selling well at Ulta. It's usually one or the other. Both.
I hate to do this, but what about Estee Lauder?
What about Boeing?
What about Estee Lauder? Are they a beneficiary of this at all or no?
They are. MAC is selling well, but Estee Lauder's been disappointing because of China.
All right, here's the bail.
In some ways, China, but this Boeing upgrade, we're talking about $300. David, why don't you mention Disney? Because I'm wrong on Disney too. But there's a lot of stuff Disney. For instance, a dividend.
Yes, there's a dividend Disney. I will mention it, Jim. And you are correct. You have been wrong. Here's the big board. It is Christian retailer Williams Sonoma. It's a NASDAQ ETF provider.
Okay, so it looks like we're about 35-ish to 40-ish% green. And y'all remember when I said it's like impossible to debate these slippery slope people who kind of just like start like, yeah, well, what about lithium then? Come on, Mikey, you're back at it again, bro. You made an argument. Let's just be very clear about it. You made an argument that electric vehicles are dirtier for the environment on a carbon basis when you consider the battery and the fact and charging. Then I showed you that that's not true. Then you went to the same company, Reuters. You literally chose the same company and you sent me a link about batteries being a potential fire hazard, which that article is right here. And I read the entire article because it's not that long. And it talks about how batteries can catch fire. And guess what? It does not say anywhere in here. It doesn't say anything about the efficiency of batteries. So once again, when you try to have a logical discussion and somebody is so convinced it's impossible to actually have a logical discussion, because then we just go slippery slope and we start going, whoa, what about this? Like, we weren't talking about that. Ah! It's like, we need a Logic 101 class here. I'm sorry, Mikey. Like, I appreciate you watching. I'm just like, go back. Go find a better article. Anyway, so Tesla's trying to recover here a little bit at the open from its down 3% in the pre-market. You have QQQ down about 0.3. Rent, is that rent of buy or rent to buy article in the NYT today? Oh, I'll go look. To buy. Yeah, and the other thing to, rent or buy. And the other thing to consider is when it comes to gas cars much more frequently cause fires than the other vehicle, than electric vehicles, so it's kind of crazy. But anyway, somebody here says Tesla, dark red, time to buy. It's I think this next quarter, this Q4 is going to be challenged. But the question is, will Tesla be higher or lower? Are you going to get a short-term lower buying opportunity? I don't know. Tesla looks like it's slipping again back towards about -3, right there with Solar Edge. Palantir down about 1.95, although Palantir is sitting at about 19.66. Open Door giving back a little bit, -3. You've got Enphase down 1.7. Remember, I don't actually expect a lot of buying enthusiasm until Jay Powell speaks. Jay Powell speaks at 8 a.m. Pacific time. So I'll be covering that. You're, of course, welcome to join for that. Even Mikey, the Mikey in the chat here, not podcast Mikey. And we'll be covering that. You can see the QQQ dropping off here. Tesla now back to -3%. Might end up being if we get a hawkish Fed today, you might end up getting -4, 5, 6% for Tesla today. Wouldn't surprise me. I don't, Tesla, it's always like history has not changed for Tesla. It is always buy the rumor, sell the news. Like nothing has changed with this company. Absolutely nothing. And then they don't exactly put on the best presentation. I think that presentation yesterday could have been a lot better. Don't get me wrong. I would have loved to have been there, but I think they did that presentation wasn't well thought out. I think it was sort of like last minute. And, then people get mad and they're like, oh, Kevin, stop criticizing. But let's be real. You don't throw a baseball at the car when previously you used a steel ball. You just are you trying to gaslight people? Yes, that's what you're doing. Okay, how about having some lighting for Elon? How about talking about the pricing and explaining the pricing relative to other competitors at the actual event? I like that we compared to the Porsche 911, but we wanted to compare the truck market. And what about maybe some projections? Even like, hey, we think at this point we're gonna have X many thousand produced. We're hoping to hit our 1,000 Cybertruck milestone by X date or whatever. And I know a lot of people say, oh, but Kevin, Elon just doesn't want to say it because maybe he doesn't know. That's fair. Totally fair. But as usual, I think the presentation could have used a little bit of work. So, but right now, Tesla falling is more market-based rather than it is Tesla, I think. Tesla in its post-market yesterday was enough. But I think there are a lot of people going into J-Pow talking who are a little nervous. I mean, after all, Treasury yields bumped back to 4.34%. Oil still sitting at 80 on WTI, which is actually great because OPEC just cut production and the market flashed that off, or like basically brushed that off, I should say. So the market didn't really care about that at all. So what's driving this QQQ decline? Is this going to be like an Nvidia, an Apple? Probably. Let's go see here. Nvidia is down 1%. AAPL down 0.25%. Yeah, you got sort of a broad adjustment down. Again, it doesn't make sense at all to have any real buying pressure when Jerome Powell's getting ready to speak in less than 90 minutes. We're at 84 minutes now. You are also still seeing Bitcoin relatively stable here. We had a good Bitcoin discussion in yesterday's Open Live. We're looking at, oh, wow, Bitcoin moving up again. Look at that. It's been stuck in the mud of about the 37 range there for a while. It's been a little range bound. It's just about at its all-time recent high here. So when I say all-time, I guess I should mean more like 2023 high. And it just hit that. Within the last hour, it just hit its 2023 high. It's not there right now, but it almost hit 39,000 there, which that explains why Coinbase is up 2% again, since these do sympathy trade pretty well. Ethereum, 2,080. We've got, let's see here. Wow, BNB token over 7 days, down 2.7%. That's it. Dogecoin over 7 days, up 7.65. Ooh. The dog coin, that's right. Yeah. Don't you have a dog coin? You have two. Oh, wow. I'm sorry. I got like the peanut gallery over there. That's you, Jack. And you're allergic to peanuts. Yeah. Mom just says you are. You could probably have them. I'm also on the page that you left off on. Oh, you caught up to me. All right. Well, I'm going to have to get some work done while you're at school. I'm going to give you some peanuts like I give Max walnuts. And then I'll catch up. All right. So, yeah, we didn't know Max was allergic to walnuts. And so we gave him a walnut cookie in Palo Alto. Let's just say it didn't go very well. He's fine, but it didn't go well. Yeah. So, what else? Let's see. Oh, let's look at the Suit Live blog. Ooh, look at Coinbase there popping off. All right. So how much should Powell push back? Question of the day. Yes. Yes. Investors, somebody says that's what I say to my peanut allergy friends too. Yeah. I had somebody have to use their EpiPen right before getting on the plane. And let's just say you don't want to do emergency landings with planes, especially when you're loaded up with fuel. You're considered heavy. And if you land heavy, you have to do a heavy inspection because it basically could damage a bunch of stuff. And that's on you. So, yeah, emergency landings, no bueno. But fortunately, well, not fortunately, they had to use an EpiPen. But fortunately, it happened before being in the air. Anyway, investors are trying to gauge whether November's stellar performances for stocks and bonds can go further. The trajectory of Fed policy will play a key role. Policymakers appear more comfortable with keeping rates steady, but concern over a potential renewed bout of inflation is likely to keep them forecasting higher rates in 2024. Yeah. Okay. So again, we'll see Powie Wowie in about an hour and 20 minutes. I'll be covering it. The live is already scheduled. Powie Wowie, Jerome Powell, bro. Yeah. Stocks face a 30% drop if the U.S. economy crashes into hard landing. Huh. Well, that's actually not that bad, given that I feel like we've already had a 30% drop in 2022. Stock investors should hope for the best, but prepare for the worst if it comes to gauging the outlook of the U.S. economy. Soft landing optimists have a case to make. Yet, historical evidence is overwhelmingly bearish when it comes to the end of Fed hiking cycles and the inverted yield curve. Equities face steep losses if the economy sees a soft-ish or hard landing. Ooh. Okay. Also, it's worth mentioning that we have today is the end of the Cyber Monday sale on Meet Kevin. We extended it for the whole week. So check out the Cyber Monday sale, again, expiring today by going to meetkevin.com. And we dropped a brand new course. It's really good, includes the course member live streams. And there's some great bundles too. You can email us at staff@meetkevin.com. So in the 11 times when the Fed has tightened monetary policy to combat inflation since 1965, stocks escaped largely unscathed only about 3 times. The other occurrences saw average peak to trough losses of nearly 30% in the years after interest rates peaked. Today's macro view takes a look at the data. Ooh, I want to see. Let's take a look at that a little bit. Feeling pretty crampy right now, Bruno. I haven't had to go to the bathroom yet. Ooh, this is a cool chart. Hard landings bring steep losses. Ooh. Let's take a look at it. I'll pull that chart up. It's a good one.
What did it feel like when you had the hard landing?
Oh, in previous times the hard landings are bad. Oh, on a plane? Oh, I haven't had a hard landing on a plane. Oh, we're talking about the economy.
I thought you meant when someone had to use the EpiPen on the plane.
Oh, that was right before they got on the plane. All right, here we have hard landings bring steep losses. Average S&P downturn 30% in hard, and then and softish landings. Yeah, look at that. Hard or soft-ish, 30% to the downside. Those are the averages. Oh, so hard because of COVID, hard because of global financial crisis, soft-ish, soft, hard because of Gulf War, soft but may not have been a landing. You know, but you wonder, this is what is this chart? So it's landings, hard and soft. Is this the year? Because, you know, we could say that 2022 was painful. Let's see here. Soft landing optimists may have a few historical precedents to fall back on. Sure, you have like 94. Do they have 94 in here? Yeah, soft. Oh, okay, yeah, max drawdown. Okay, soft landings are the holy grail of monetary policy. In the 11 periods laid out in the paper where the Fed has tightened monetary policy to combat inflation, stocks escaped unscathed only about 3 times. In the other occurrences, they notched an average 30% decline. Huh. Soft landings are when GDP declines by less than 1%, or they didn't declare an official recession. Okay. There are about 3 times in this chart, they say, where the economy had a roughly soft landing. Here, well, I know that's one of them. I don't really see the other two, other than the other two are soft-ish, and those look painful because of the dot-com bubble. But anyway, and see if they're using 1999 to 2000, and look, they're wait, but they're pre-writing this. Max drawdown from the years prior is what they're trying to say. But wouldn't today you be using 2021? You know, we're like a lot of stocks are down from those levels, and they certainly the maximum drawdown. Okay, so I don't know if I trust this chart that much, because look, the maximum drawdown. Okay, well, they use a couple years before the pain. So if I go a couple years before the pain, go to like QQQ, or let's go to the S&P 500. Okay, so let's go out to the week chart. So there's a potential max drawdown, right? That would be deemed your max drawdown at this point. So you're down at 346 versus 367. 346 divided by 467. That's a 26% drawdown. That's in line with the average. So you could literally have a soft landing and be in line with the average drawdown with what they're saying. I think I'm going to email this person. Be like, bro, what you're saying already happened in 22. Tatiana. I'm going to send them a letter.
Dad, can I tell you something I built on this?
Yeah, you want to show me right now?
Yep.
Okay, hold on. I got to play the disclaimer. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Boom. Okay, so here's what's going to happen. I'm going to hit end this and then click the redirect link so you can hit the reminder to the Jerome Powell stream in about an hour and 15 minutes. Got to jump on over to the Course Member Live. We'll see you soon. Bye.